All right, welcome to our FogCutter Live here at Trader's Edge. I'm Mike Curtis. I'm here with Preston James, founder of Trader's Edge, and we've got another exciting podcast coming your way to kick off the week. Preston, always just a lot to cover. We got ground to cover here, so why don't you say hi? We'll get rolling.
Yeah, a lot of ground and in a shortened week. We're in a shortened holiday, July 4th week, where not only Friday the 4th is a holiday, but half the day on Thursday. It just feels like Thursday and that shortened day is going to be a lot of catch up for the market, a lot squeezed in those very few hours. So that's always fun and exciting.
Absolutely. We're fresh off brand new market highs. So we're going to talk about that. We'll talk about some of the things that are on tap for this shortened trading week. But before we dive into that, Preston, should we just kick things off? We got a really fun comment in, a note from Captain David from Fountain Hills, Arizona.
Let's shout him out. Yeah.
So we love. If you know Preston or myself for a while, we love hearing from our Trader's Edge clients about their success, about how they're learning such an amazing skill to trade and invest for themselves. And so we wanted to shout this out to start. So he said he started with Trader's Edge February 2024. Said he was up and down, just kind of treading water as he was learning. And then he really dove in, started to learn his brokerage platform, which can be a little bit of a hurdle sometimes. Started to learn about some defensive strategies, you know, that HIH that he mentions in this comment, that hell in a handbasket line where you kind of take some defensive adjustments. And then I love, he says, currently as of 6/20/2025, up approximately $14,700.
It's awesome.
Closed positions, feeling good about heading in the right direction. So Captain David, yes, thank you for sending that over. We just love Preston's office wall. One of his office walls is just covered with emails and texts, and
I'm going to add this
like
one.
That.
This one's going on the wall. Nice job, Captain David S.
I love it. So, all right, let's dive in. So the VIX has calmed down. If you don't know the VIX, that's kind of the Wall Street's fear indicator. It's the volatility index, right? When the market is just climbing and steady, we'll see that volatility index drop. So as the market is hitting these new all-time highs, we're going to see that just cool off. So Friday we had that, right? S&P, NASDAQ regained all-time high levels. And so that was really the big news from last week.
Yes. And on last Friday on the Wow Insider webinar, I spent probably the first 20 minutes. And of course, the news media, there's a Reuters story that led. It was at the top of the fold, top of the internet page saying, hey, the bull market's on. You know, hey, I guess time to dip your toe in. And
that's right.
And I was pounding the table again on saying how we were on that for the last 2 months,
right?
Because we went through our little follow through day. But yeah, it's go time for stocks, and leaning on. We just stand on the shoulders of people that came before. One of them is Bill O'Neill, the Investor Business Daily founder,
right?
And he's fond of. He studied markets upside down and sideways for decades, and talked about how there's a market cycle, that it's often different from the business or economic cycle. That's very important, because you don't want to listen to your friends and overhear conversations. They're oftentimes talking about the economy, and the stock market is oftentimes different. And then that 3 out of 4 stocks go with the market cycle. So it's not taking every stock with it, but the wind is to the back of most stocks.
Definitely.
And that's important to know. There's a lot of people still fearful. The stock market, it's a thing. Did you see what it did just a couple months ago? Yeah, that was then, but this is now.
Definitely.
Yeah.
Yeah, no, there's a lot of good insight in that, because we, back April 22nd, I believe, was when we saw that follow through day. We started getting back in, and it's just funny how these headlines lag what's really going on. The markets are always forward looking. So when the tariff, dust hadn't quite settled yet, the market was already looking past that. And we were able to identify that pretty early on, right there, end of April. And just makes us laugh, Preston, every time we see those headlines of, hey, the bull market's back on. We're like, well, we've been building bullish positions for 2 months, and now the headlines
I don't know if you get sick of it, but I'm taking screenshots. I know how to draw on my text screen, and I'm sending it to you and Kyle. Look.
Absolutely. And we were joking about it too the other day, Preston, because what we saw last week too was, I think it was Morgan Stanley, JP Morgan, Goldman, Bank of America. They all start coming out and they're saying, hey, we're seeing more upside. We're going to increase our guidance now for 2025. And as March and April were happening, they were lowering it, and then they tick it up a little bit, then they tick it up. And I'm like, what? How is this relevant? How is it still making headlines?
I know.
They just keep moving the goalpost as they move along. It just gets a good chuckle out of us. But yeah, so just to piggyback on your point of, money's flowing back into stocks. The other headline I saw today that made me laugh was, I can't remember if it was JP Morgan again, one of the big banks said, oh, maybe we were wrong because the foreign investment is still coming into U.S. stocks, right? Because there are some headlines about all that. Hey, foreign money, it's not liking U.S. stocks right now. And now the headline today is actually, I think those headlines were wrong, with all the tariff stuff, that money is finding U.S. stocks and staying in the U.S. market. We're like, of course, it's been going up for the last 2 months straight.
Yeah. It definitely has its own rhythm. And man, that tendency to want to be plugged in and I'm going to be on the cutting edge. I'm really going to do this. Boy, if you listen to all these voices, they very often are lagging. Mm-hmm. And we kind of have to get removed a little bit and just trust what we see and what the market's done for umpteen decades. It averages a correction a year. That they average about 14 weeks of time. This one was about 15 and a half weeks. And boy, a month after that worst of that tariff stuff, when we were a month later and the market was starting to come back up, I remember thinking, this market has a lot of ground to cover if it's going to keep with that average of what it takes, by the time it starts correcting, by the time it hits those headlines like we just had.
Right.
And it's about a week and a half longer than average that it took to go through that whole thing. Wow.
Yep, no doubt. So let's flip to this week. You've already mentioned we're a shortened trading week, right? Friday, the market's closed for the 4th of July holiday. Shortened session on Thursday, right? Yeah. Shortened. So is it closing at 11 a.m. Eastern, Preston? I'm trying to remember off the top of my head.
1 a.m. Eastern, 11 o'clock our time in Mountain. Yeah.
So 1 p.m. Eastern. Yeah. So I'm in California for a baseball tournament. My time zones, I'm used to being in that mountain time zone. So looking at this week, Preston, we've got a jobs report. Usually that's the first Friday of the month. And because, of course, the 4th of July holiday, that's coming out Thursday morning. And the jobs report's a biggie, right? People watch that closely. It can impact the monetary policy if the Fed's going to do anything with interest rates. So that's coming out Thursday morning. It always hits an hour before the market opens. So that one has a tendency to bring a little bit of some volatility to that Thursday morning session. So anything else on that front, Preston, that you're kind of...
No, again, it's a lot going to be squeezed in one half a trading day.
Right.
2 full days of normal market action are going to happen in there. And I think Wall Street's really going to be heading out and heading for the Hamptons or whatever on Wednesday. Right. I mean, Thursday, this is a long holiday weekend, probably starting half day on Wednesday for most of the big monies. The only one I recognized for this week, it's Tuesday after the close. And I just know it because, well, they make a product that I think every single person on planet Earth knows. Corona and Modelo, but especially with Corona and just the lime that started. A little side story, if you might. A lot of people don't know this, but back in the 90s, little California surfer dudes would drive down to Baja California into Mexico to find the waves, searching out It's when the Beach Boys were out and loose and doing the songs, and maybe that was a little too early for the Beach Boys. But anyway, they'd go down and they'd like to, get a beer also, but buying them from some Mexican little tiendas, little stores down there, oftentimes there'd be dust on the rim, so they would bring down limes and they would slice open limes, clean the top of the beer cans, and I guess it just hooked on that you just drop the lime in, and that's how the whole thing started with Corona. But Constellation Brands, STZ, owns that brand, and they own lots of different spirit brands as well. But the reason I'm spending even any time with that, I know they have weekly options, but if you look at the stock chart of STZ, a lot to be desired. This thing obviously isn't going with the current market cycle right now. It's just in a funk. And it just goes to show all stocks do not go through a correction and then rebound altogether. It takes 3 out of 4 stocks with it. And I think sometimes people can they can kind of fall in love with the name, like, oh, Corona, I love it. It'll never go bankrupt. And you could put a lot of your portfolio in this, and it pays a good dividend and probably not going bankrupt, all that. But while the Robin Hoods and AI stocks and storage and cybersecurity and lots of other names are zooming with the market right now,
Totally.
you're underwater in STZ. And so it doesn't matter what you like. We need to also realize that we need to watch and see what stocks are moving, what stocks are breaking out even before the market is done with its correction.
Right.
And we've seen names like that, Mike, and we're in them right now. In the Wow Insider, we're in them in the SAMs, the small account mastery that we're doing right now. We don't stay married to what we really, really like. But all that said, if there's a strong reaction, if they kind of break the spell, and what it would be is called what we call a surprise factor. If we see on Wednesday morning STZ jumping higher in a certain way with certain volume, I will instantly be interested.
Right.
And we could end up having that be our newest position this week. We'll have to see how it responds.
Yep, for sure. Mm-hmm. Yeah, pretty light on the earnings front, but they're tomorrow after the close, I believe. So always a good one to watch. But Preston, that does bring up kind of a quick topic we could hit on before we wrap this one up, is just that kind of the sector rotation where money likes to flow. So maybe we'll just throw you on the spot a little bit here, but we saw it in a big way. One that just recently comes to mind for me is when all the tariff uncertainty was just rattling the markets in April, right? And it just really beat up stocks like Nike and Decker's Outdoors, who a big part of their business is bringing in product that's made overseas, made in China, et cetera. And then the stock that just stood out to me that just the money was finding and it was just going higher and higher was Netflix, right? It was this safe haven where they're not dealing with tariffs. They're not dealing with importing. They're streaming movies, right? They're streaming TV shows. So we just saw that the money flowing into certain areas. We saw it flow into gold. We saw it find, money will rotate. And just like you showed with Constellation Brands, money has left that and it's found the AI stocks, PLTR, for example. If we flashed that screen up or that stock chart up, following the Constellation Brands, how that looks compared to one of these AI stocks that's just hitting new highs, you can see that contrast, right? The money is flowing here when it's not flowing in to that Constellation brand. So where else, Preston?
No, it's so true. And just to finish off my point, I mean, look, I eat an avocado a day. I know that's this is going to make sense in a second. I love going to concerts in the Sphere in Las Vegas. I love a Corona and a lime. Modelo's my favorite. If you have me at a barbecue and have some meat going and a cold Modelo, I mean that's about as close to it as you can get. And then I've really loved the 23andMe, the gene sequencing, and this is great. But all of the following I just mentioned have horrific looking stock charts. We don't have to look at them all right now, but 23andMe just went bankrupt like 6 weeks ago.
Right.
And avocado, and you think, oh my gosh, avocados are so healthy. I have one a day. Well, you come to find out that these two major avocado like farm publicly traded stocks, I mean, there's squabbles between family and who's inheriting what and who's getting what, and bad acquisitions. It's just a mess on the stock side. So just because you love a product and consume it doesn't automatically mean, oh, I got to go jump in and buy shares of the stock. You can do it for fun, buy a share of stock and hang it on your wall, but don't be doing it serious or choosing them for strategies that you want to lean on to make money. Just like you said, Mike, we want to go with where's the money going? And maybe you don't understand the stock too well, and that's not that important.
Yeah, definitely.
Mm-hmm.
Yeah, it's the easiest way to see it. We talk about price action, what the stock's doing, and volume, right? How much volume is behind some of these moves. And that's the purest indicator, not your opinion or not what you think might be ready to move or what might have some seasonal effect. It's really what the big money, the big institutions are, what they are pushing their dollars into, what they are pushing their hundreds of millions and sometimes billions of dollars into is what you can gauge as those opportunities where that money is actually flowing, right? As
Yep.
some of those geopolitical fears cooled off, right? We saw money leaving energy, money leaving, those little more safe havens when the uncertainties popped up on that tariff front. It started moving back into the opportunity, the growth stocks, those types of things. So really paying attention to where that money is flowing is a powerful piece of investing. And we're constantly looking at that and trying to find where that money is flowing.
That's exactly right. Exactly. And it's just fun. It's relentlessly fun and interesting to tune into the market.
Yeah, definitely. So to wrap this one up, we've got one question that came in kind of from our Monday mailbag, if you will. The question was, can I turn the money press more into a bearish defensive trade if I expect the market to pull back? So I think we talked about kind of a similar topic last week, but here we are, the market climbed to these new highs. We've had a really strong, week and a half here. So Preston, how would you kind of speak to that as far as if they're thinking we could have take a week off, maybe the market's due for a little profit taking? How do you handle your money press trade that's, usually more of that neutral to slightly bullish price action is what we want to see. So if we're in for a week where we might have a correction or not really a correction, excuse me, like just some profit taking, a little pullback, what are some of your go-tos on that?
Well, the plain vanilla one is we don't have to be sellers of those weekly put options every single week. Once we do that, we've established a neutral to bullish situation where we make money. This is kind of fun because there's three things a stock can do: go down, go sideways, or go up. And we get two of those pretty much in our favor. And the amount of the premium that we take in for the put that we sell, it can even go down by that amount and we're still ahead that week. But to your point, Mike, if we don't sell in a money press situation, what's left is we have a put in place that we're long that we bought that basically goes up if the stock goes down.
Right.
So, man, that always feels good, especially if we haven't had a correction for a while. We know we're kind of due. And you and I both experienced it where we don't sell puts. Sometimes it's a couple weeks in a row and we're sitting there making money as the market is going through profit taking.
Yeah. And here's a beautiful thing about the money press trading strategy that fits right into some of that defensive kind of mindset if the market's ready for a pullback. If the stock's trading right at 100 and we sell a 100 put, a weekly 100 put, let's say we bring in $2 of premium for that. Okay, we sell that put contract, we get paid $2. We have baked in a $2 downside cushion. Our break even for the week is actually 98. So the stock could go from 100 to 98, and come expiration Friday, we're going to be paying about $2 to close out that 100 put. Remember, we got paid $2 in the beginning. So just the structure of the money press itself gives you some downside cushion. So if there is a week where maybe Monday, Tuesday, Wednesday, the stock pulls back from 100 to 98 to 97 to 96, but then it finishes the week with a little bit of a pop, you could be right back to profitability. If that thing climbed back to 99, we can still make a little profit for the week, even though the stock is $1 lower from the week before. So the money press has some wiggle room built into it naturally. So that's something I wanted to make sure the folks don't forget as well.
Yes. And I would just add that there's plenty of around $100 stocks that have $4 and $5 weekly premiums. I mean, the two, that's a very
Absolutely.
conservative
Yeah,
scenario. Not conservative, just it just depends on what the activity in that underlying stock is. But some have more of a growth trajectory and they're being talked about more and there's just a lot of buzz and that reflects in that weekly premium at $4, $5, $6 is what we're seeing.
absolutely.
Mm-hmm.
So there we go. I think we got a few things on people's radar for this week. Again, shortened week. We'll see what the jobs report Thursday morning does to the markets. If that gives any hint towards maybe some interest rate cuts speeding up or slowing down, that's really what people will be looking for. Investors will be looking for behind that news. Really light on the earnings front, like we said, but that'll start ramping up here again in just a couple of weeks as we jump into the next kind of earnings season. So we'll be right on top of all that to help guide you through that and guide you through all the noise like usual that sometimes the Wall Street talking heads and news likes to throw our way. So anything from you, Preston, before we sign this one
No,
off?
I think it's solid. Let's. I just want to wish everyone a happy, long, extra long July 4th weekend. I think we all deserve it. Let's make sure we grill up right, grab a Modelo, raise it up to Constellation brands, raise it up to the surfers, the Corona. No, that's solid stuff, Mike.
Okay, thanks, P. We'll sign this one off, and
All
we'll
right.
see everyone next Monday following our 4th of July long weekend.
All
Okay,
right. Be
take care.
safe, everyone.
Definitely.